ran up for 7 straight days, right up there. Then it pulled back a little bit, right? Where did it go? Right into the gap. And we're forget exactly where I think. We made a lot of money. I put this trade out personally, and you can see that huge gap up right there. And what did the market do? 1, 2, 3, 4, 5, 6, 7-day run up. It ran up for 7 days. Okay? Ran up for 7 straight days, right up there. Then it pulled back a little bit, right? Where did it go? Right into the gap. And we're going to cover all of that later. But 21s are extremely, extremely powerful. Okay? Extremely powerful. Dan saying, Nick, do hedge funds use this stuff? No. Unless I've trained them, they do not. Good question. Randy saying, Nick, was an 18 narrow body? 21, 19, 20, that's 19. Okay, this was 21 here, so this is 19. 18 was. Yeah, 18 was. Okay. Which is, in all fairness, a multiple of 3. But you got to have what, Randy, to take a trade? What else is missing? Secondary factor. Are we going to take a trade on a time count by itself? Absolutely not. Okay, what does a secondary factor do for us? Everybody? What does a secondary factor do? It increases the odds, stacks the deck. There you go. Okay? If we have one factor, what are the odds? Coin flip, 50%. Okay? If we have 2 factors, what are the odds? 70 to 80%. What about if you get like 4 factors? The odds are just tremendous, right? Powerful. Okay? Yeah, you're probably moving up 85, 90%. All right? That's the difference maker. That's going to be the difference between what you're going to learn today and the public. Okay? It's a difference of what you're going to learn today and the public. Okay? People say, Nick, how could you guys do this? It's what we know. Okay? It's what we've learned. Not going to be right on every trade. You're going to get stopped out. I get stopped out. It still happens. But I get stopped out for small numbers. That's the key. All right? And I usually can let the winners run when there's a good pattern in play. All right? Trevor saying, Nick, so time count needs a narrow body bar to be a single factor. Well, it needs it right now because you're just learning this. But there will be times later when we get into this a little bit more when time count, you're not going to need a narrow body bar, but you're going to have other supporting factors to work the trade. But for now, when you're learning this, the narrow body bar is going to be a huge advantage, okay, to use. It's going to give you a huge advantage to use. Okay. Kevin saying, Nick, for this trade, what price did you get in? I think we got in right here, Kevin. The day before, actually. And I'll explain this one later, why I did it there. This was actually the day after Thanksgiving. And I'll never forget this day as long as I live because my wife called me up on that day, and she was out shopping. She's like, I think I bought enough. And when I saw the close of the market closed at 1 o'clock that day, I told my wife, I said, no, no, no. Stay out. Just shop more. Don't worry about it. Buy whatever you want. It's fine. I was having a, because I saw this, and I saw the time count of 21. I said, oh, my goodness, we're long. We're going to wake up on Monday. This is going to be a home run. And sure enough, it was. So I told her, I said, no, no, go out. Spend more money. Don't worry about it. Have fun. Go shop. I got the kids. I'll watch them. Don't worry about it. Go buy some more stuff. Christopher saying, Nick, how do you decide high pivot or low pivot when the market is choppy? It's very easy. Is this the high pivot or is this the lower high? High, lower high. You go with the high, right? Don't make it difficult. Yeah. Yeah, go with the high. That's all. As long as the high don't get taken out. Now, if price comes up and it gets taken out up here, then this is your new high pivot. You start to count all over again. Okay? Okay? All right. Don't microanalyze these charts right here. I know you got the 1, 2, 3 right there, and then you got the bounce. But we're going to cover this more in detail. Once we get to secondary factors, you guys are going to all know how this works even better. Okay? Don't psychoanalyze it right now, trying to decipher it, find things wrong. Just wait. Trust me on it. Okay? Trust me. We don't have people in here for the third, fourth time because it doesn't work. They're here because they've seen it play out. All right? So don't try to psychoanalyze it right now. We're going to cover this throughout the entire day. All right? So I don't want to waste a lot of time on looking at, one date. Hey, can you tell me about October 10th? Or, can you tell me about November 1st? Or, something like that. Let's just get through it, and then you guys will see when it starts to unveil itself. Let it play out a little bit. We're going to get into that, Faye, with moving averages and all of that, okay? But we're going to come back to this chart later. There'll be a lot more to talk about on this chart. This is not the sole factor. There are other factors here, okay? Just be understanding and just take your time. We're going to cover this a lot more in detail. All right, let's move over to the next one here. And what you're going to see here, this is what we call an advanced block. All right? 1, 2, 3. This is kind of a narrow body bar. This is what we would call, in spirit of narrow body. It's like just a hair longer than a narrow body. What do we need to have a narrow body? What constitutes a narrow body bar, everybody? Square or less, right? Sometimes, though, you'll get a bar that's just a little bit bigger than a narrow body bar. So we'll still consider it as long as you have a good secondary factor. Sometimes you might have 2 secondary factors and you don't even care. All right, you don't even need a narrow body bar if you have 2 secondary factors, because how many factors do you need for a trade? Everybody? How many factors do we need for a trade? 2 or more. Okay, 2 or more. That's going to put the odds in your favor. Once you have 2 or more factors, the odds are now in your favor. Okay? Excellent, excellent, excellent. All right, so you have an advanced block. All you're thinking about is 1, 2, 3, narrow body bar or spirit of narrow body bar. Secondary factor. Can you take this on the short side? Yes. What about if you had this? 1, 2, 3, 4, 5, 6, 7. This is the 7th candle and you had a narrow body bar. Can you take it on the short side? All right, here's one for you though. What if we had 1, 2, 3, 4, 5, 6, 7. This is the 8th candle. Can you take it on the short side? The answer is yes. Narrow body bar can come on time count or after, 1 bar after. Does everybody understand that? Narrow body bar can come on the time count or 1 bar after. All right? Write this stuff down. Write this down. You got to write this down. Narrow body bar can come on the time count or after. What if we had this? You're going to run into this sometimes. So you have pivot up, pivot down. 1, 2, 3, 4. Narrow body bar is on 5. Secondary factor. 1 secondary factor. Can you take that? So we got 1, 2, 3, 4. Narrow body bar is on 5. No. No. The answer is no. Cannot take it. Okay? All right. Is that a multiple of 3 or 7? No. It's not. Narrow body bar comes after 4. There's no multiple of 3 or 7 there. So the answer is no. Does everybody understand that? So there is no factor there from that. All right? That usually helps people. All right? Everybody got it? Yep. And we're going to go through more examples of this. Alan saying narrow body bars on 3, 4, 6, 8, 9, any multiple of 3 and 7 are enough to take a trade, or is there another factor? Well, you always got to have a separate secondary factor, right? You always have to have a secondary factor. All right, you always have to have a secondary factor. All right, let's go to the next one. Now, this is the advanced block. Do we need to know this? Do we need to know that terminology? Absolutely not. What do we need to know? The pattern. All we need to recognize is the pattern. 1, 2, 3, narrow body bar, secondary factor. Okay? Next, we have another advanced block, but this is the bullish one. It's to the downside. 1, 2, 3. You have a secondary factor here. Can you take that trade? Yeah. What about if you have it like this? One, 2, 3, 4, 5. Here's your high pivot. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Can you take that? Yes. All right? 14, 1 after. Okay? 14, 1 after. Also, 15 is 3 times 5, right? All right, excellent. They say, Nick, should you never take trades on second and fifth candles, even if there is a secondary factor? If you have two secondary factors, it doesn't matter what candle it's on. Okay? As long as you have 2 secondary factors. If you have 2 factors, period, it doesn't matter. You can do it. Okay? Mark saying, Nick, how do you know not to take 14? Is that a narrow body bar, Mark? 14? That's how you know not to take it. Right? We want the narrow body bar. We're looking for that narrow body right now. There will be a time when you will take it, but you're going to have two other factors there, okay? So for now, guys, I'm just trying to get this into you because the narrow body bar is going to give you such an advantage over everybody else. It's almost like the poker face that we were talking about earlier, which is really kind of what you want. So you want that narrow body bar in the beginning. Later on, when you guys get really good at this, like I know there are times I'm going to take it without a narrow body bar, but I see things on the charts. Right now, we're not even into secondary factors here. So, I'm just trying to get across this point to you guys. I just want to drill it into everybody's mind at the moment. All right, that you need two or more factors to take a trade. The narrow body bar is going to be such an advantage in the beginning. Later on in life, if you get really good, you may not even care about the narrow body bar anymore. You might see things and say, hey, this is the trade, I'm taking it. But right now, the narrow body bar is going to serve you, in such a good way. And that's really what we aim at. So that's really what we're looking to do. I'm just looking to put this in your mind right now. I'm not looking to make this hard. I'm really looking to make it easy at the moment, okay? Later on, we get to live examples. It'll get tougher, okay? I assure you that much. But with secondary factors, you're going to be in great shape. Lily's saying, Nick, if a narrow body bar occurs on 3, 4, 6, 7, 8, we can take the trade. Yes. Provided you have what, Lily? Provided you have secondary factor. The color does not matter, Leo. Yeah, I'll let you know when colors matter, okay? Really, until we get to inside bars, colors aren't even going to be a big deal. Okay? Now, here's where we have just a chart showing you, double top. This is basically just a double top. How many of you are familiar with hearing the term double top? Yeah, almost everybody, right? That's when price comes back up into its old resistance point. So here, price rallies up. Here, price comes down. Here, price rallies up and starts to pull back at double top. Now, why do double tops work? Or why do you see double tops play out so much? Here's just a little trick of how they're going to work better. So the reason is you have sellers, you have people that bought stock up here, right at this pivot. Okay? And then the market got sold. So the person that bought stock up here is he feeling pain right now, or is he feeling pleasure when the stock goes down? So he bought stock right here, and all of a sudden market's moving lower, and then price moves back up. So when the stock's going down, is he feeling pain or is he feeling pleasure? Susan says, that's me. You're feeling pain, right? You're feeling pain. So what happens when the stock gets right back up? What does that person want to do? They want to get out of what? They want to get out of the pain. Okay, so they sell. All right? Now here's a good way to know if price can go above it. It's the volume. So just say up here, you had high volume. This candle has huge volume. Normal volumes like this. All of a sudden you got huge volume. And then you go back up into double top with this kind of volume. Is that enough volume to get through that? So is the volume up here where my cursor is enough volume to get through the prior resistance volume? The answer is no. Okay? Now what if this candle here, you go up with this many shares and you pull back? What is that telling you? It's setting up to go back through it. Okay? You've already exceeded the volume. So these guys right here is what we call the resistance line, or what we call the distribution line, has been absorbed for the most part. And then you just got the natural technical people taking it back down, or candlestick people taking it back down, but it's ultimately looking to go higher if the volume is higher on this side. Okay, it eventually looks like it will go through. So you start looking for your setup. You start to look for your 1, 2, 3, or you start to look for, secondary factors. Okay? Does everybody understand that? How about you, Susan? You're new to technicals. Do you understand that? Excellent. All right. All right. It's just like anything in life. Remember, stocks are traded by who? Who trades stocks? Stocks are traded by people. Right. Human beings. Even if they're programmed, guess what? They're programmed by people. Okay? It doesn't really matter. It's all the same stuff. So double tops, Ricardo, real quick. Price rallies up and it pivots. Now somebody was a buyer here and somebody was a seller. And what happens when you get a pivot and price moves down is that the sellers overwhelm the buyers, right? We got more sellers than buyers. Here the market sold off. So the person that was a buyer up here where my cursor is, and when price starts to move down, they're feeling pain. They're not in a comfortable position. Nobody likes to lose money, right? They're not in a comfortable position. So they're in pain. All of a sudden price comes back up. What do they want to do? Do they want to stay in pain, or do they feel better and they want to just get out of that trade so they have no more pain? What do they want to do? This is for Ricardo. They want to get out. Okay? That's why double tops. Yeah, they get to break even. I'm getting out of this trade. I'll take a break even. I can't take the pain anymore. Now, if you had heavy volume on this first pivot high right here, okay, and you come up into the pivot top with low volume, the odds, it's not 100%, but the odds are favoring price wants to move back down. Okay? The odds are favoring that price wants to move back down. So if you see that, generally you could get out of the stock at break even and say, hey, I'll call it a day, I'll wait again, I'll watch the charts, let the charts tell me more. However, if by some chance, got good volume here, all of a sudden price rallies up and it's better volume, and you pull back, the odds are saying, hey, maybe this is setting up to get through here, because just the fact that you had high volume here tells you it ate a lot of this distribution line, got taken away. Okay? So, yeah, you still get a little pullback, but it could be setting up to go higher. All right? And that's where you get what we call the higher low. Okay? That's where you usually get a higher low. All right? Lucas saying, Nick, then go short maybe? Yeah, you go short sometimes, sure, as long as you have the right two factors. Yeah, once you sell on low volume double top, yeah, generally that's the way it works. Scott saying, Nick, what is a distribution line? Distribution line is just a double top area, okay? So wherever the double top is, that's where the traders are going to come in that were holding longs here. They were holding a buy here. They bought the stock at the high. They're going to be sellers. But you're looking at the volume. So if the volume is low, and then you come in with higher volume, and you pull back, generally they're looking to take that through. You usually ate up all that distribution. Okay? All those people that were looking to get out at break even, you usually took care of them. They're out of the picture now. So they're not going to hold the stock back. Remember, it takes buyers and sellers for stocks to move higher. They don't move higher because of magic. Okay? There are buyers that push stock up higher, and then there are sellers that push stock lower. Okay, that's why you see when they're short covering, people that are short, they own something that they borrowed. I mean, they sold something that they borrowed. They have to buy it back, and that's why you get such a big move when they're short covering. Okay, because they're all coming back in. And then you get real buyers that are not shorts that push the stock up even more. All right, but we're going to cover more of that stuff. Okay, Brian L., how are you, Brian? Saying, Nick, would you buy into the higher volume pullback? It depends. If I have a secondary factors, I will, of course. Okay, done it many times. Mark S. is saying that, can you tell a buyer or a seller bias? At times you could, but it's generally going to be by looking at the volume and looking at the pattern. we're not even past the first segment of the day, guys. So, you know, when we get to secondary factors, you guys are going to have a whole different can of worms to work with here. All right? Right now we're working with one worm. All right? We're not really working with much. Okay? Later on we get into secondary factors, we're going to have a whole lot to work with. Now, maybe earlier you guys have heard me use the term as above, so below. That's straight out of the Bible. Okay? What happens to the upside will happen to the downside. It's just the way it works. So price moves down here, and we get a pivot right here. Then price starts to move back up. Okay? Price starts to move back down. Why do things bounce off double bottoms? Anybody know? Well, somebody down here shorted the equity, right? So they sold short. We're going to call that SS. Sold short. All of a sudden the stock went up. What are they in? Pain or pleasure? You got it, Ricardo. Shorts are in pain. Stock is moving up. All of a sudden the stock moves back down. What are these shorts going to do? They're going to go what we call SC, short covering. They're going to buy in. Okay? They're going to buy back. They're going to cover their position. All right? Nobody likes to be in pain. Nobody. Nobody. Hedge fund managers, nobody wants to be in pain. All right? It's not a comfortable position. Right? Pain and pleasure. Those are the two driving forces of everything we do in life. Everything. We're trying to avoid pain and gain pleasure. Yes, we are that simple. That's just human nature. We're that simple. Okay? We're not looking to endure pain. We're looking to avoid pleasure. I mean, we're looking to avoid pain and to create pleasure. That's what we're about. All right? Stocks are the same way. Now, real quick, if this candle here had this kind of volume, and this candle here has this kind of volume, what is that telling us? So on the right side here, the double bottom low, we have less volume. What is that telling us? It's going back up. The odds are telling us we're probably going to get a bounce because we really don't have enough volume to overtake this low. Okay, this supply line down here, we don't really have enough volume to do it. All right? So just say, for instance, you now have this kind of volume, okay, at the low, and it bounces and holds. Next time around, if it goes lower, you got to really be careful. But we're going to talk about where the closes should be and all of that. We're going to get into that a little bit lower. How many of you here today trade the S&P 500 E-mini futures? All right, good. We got a few. Excellent. All right, I'm going to show you some tricks that the institutions play with that a little bit later. Okay? Normally what the futures traders like to do, the institutions, they like to pierce the low by like a couple of ticks, 1 or 2 ticks, and then they rip it up the other way. Because most textbooks, how many of you here have bought a textbook about technical analysis? How many of you here have said, oh, I'm going to buy that book at Barnes & Noble's? All right, throw it out, sell it on eBay, okay? All those technical books, all they do, they all tell you this, and tell me if I'm wrong, they all say, once a break of the low occurs, short. Don't they say that? How many of you read say that? Once the double bottom low is broken, short. All of them. That's the dead wrong thing to do. That's the total opposite. You don't want to do that. That's crazy. That's trading suicide. You never do that. Okay? I can't tell you how often that game is played. It's terrible. I've seen some of these books. Believe me, I spin my wheels and I say, oh my goodness, this is crazy. This is insanity. This guy charged somebody $30 for this book to tell them wrong information, lose them tons of money. The worst thing you could ever do. The institutions that move the markets, right? It's not the individual retail trader. It's institutions. It takes billions of dollars to move markets. They're going to pierce this on purpose, only to rip it right back up. Watch this. Watch this. It happens on all different time frames too. So here's a daily chart of the spiders. Here's a perfect example. So here's a double bottom. Look how they pierce the low right there. Look how that low gets pierced, and then you move back up, and you start to work back up. But look at that, how they pierce it. Get all these guys to go short, then boom, they bring it right back up. They do it all the time. Okay? They do it all the time. Still, the same stuff is going on, from the beginning. Speaking of Jesse Livermore, he used to say, human nature never changes, therefore the markets never change. And I honestly believe that. I honestly, truly believe that. All right, let's go to any questions on double tops and double bottoms? Luke is saying, Nick, you still start your account on that new pivot that was penetrated by a few ticks? Yes. Anytime you get a new low or a new high, you start a pivot. You start that as a pivot, okay? Every time. All right, excellent. Now we have this pattern right here. 1, 2, 3, doji. What is a doji? What is a doji? Anybody remember that? What is a doji? It's a narrow body bar. It's the same thing, right? It's just another name for the same thing. Narrow body bar, square or less. Doji, just a cross. Open and close the same. Can't get any more narrow than that. Secondary factor right here. 1, 2, 3, narrow body bar. Short or long? Short. Okay. What about this? 1, 2, 3, 4, 5, 6. Seventh bar, narrow body long. Short. How about this? Eighth bar, narrow body with a secondary factor. Still a short. How about 9? 1, 2, 3, 4, 5, 6, 7, 8. Ninth bar, narrow body. Short. How about 10? Narrow body, secondary factor. Still a short. Okay? It could be on a time count or after a time count. Long as you have that secondary factor, it's a sell. Everybody got it? Excellent. Good job. Good job. Well done. It's good to see. Everybody got the right answer typed in there. Perfect. 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 Very good. All right. Let me just clear out some of these questions, and we're going to keep moving. All right. Real quick. Do we need to know this name, Doji Star Bearish? No way. We don't even need to know it. Okay? How about this one? Doji Star Bullish. As above, what? So below. As above, so below. Same stuff. Same stuff. Nothing changes. Okay? You have 1, 2, 3, 4, 5, 6, 7, 8th bar, narrow body bar, secondary factor. What are you going to do? Going to go long. Good job, Nathan. Yeah. Good job, Richard. Yeah. Go long. All right. Easy. All right. As long as you have that secondary factor. Now we're going to get into secondary factors in a little while. It's going to, things are going to start to change up on us a little bit. Okay. Dan, how are you? Dan saying, Nick, the lower volume at double bottom is counterintuitive. No? I might have missed your example, but if you're talking about here, you want to have higher volume. That will always be an enhancer. But we don't even really need it. Okay? But it is an enhancer. Okay? Stephen, how are you? Stephen saying, Nick, if volume is high enough, can you break through a double top without any pullback? You can. You can. But I'm going to cover that a little bit later. If you break through the double top on a close with high volume, you're generally going to go higher. Okay? Just to make it real easy, you might want to write that down. Okay? If you break through a double top with higher volume on a closing basis, you close above the prior resistance high, that's a sign of strength, right? That will be a sign of strength. Price generally wants to go higher. Yeah, you don't even need confirmation, generally. But when we get into trend and secondary factors, you're going to have a better idea, and we'll cover that again down the road, okay? So I don't want to jump too far ahead with some of these questions without going over what you need to know first, okay? So just bear with me. All right, let's